We are discussing amalgamation of companies. In amalgamation of companies, we have discussed part 1 and part 2, that is meaning of certain terms, objective of amalgamation, types of amalgamation, and purchase consideration calculation. And regarding purchase consideration calculation, we have solved some questions also. 4 questions we have solved. Now today one of the most important area, that is accounting for amalgamation in transferor books and transferee books. So let us discuss accounting for amalgamation. So part 3, accounting for amalgamation. Accounting for amalgamation, sir. First we are going to discuss transferor books. In the books of transferor, in the books of transferor. Transferor can also be known as selling company, which is selling their business. So it can also be called as selling company, because it is selling its business. Now, in amalgamation, sir, what is the accounting treatment we do in the books of transferor? The accounting treatment is quite simple. Transferor company is going to be liquidated and it is no more in existence. Therefore, simply you need to close the books of accounts of transferor company, irrespective of type of amalgamation. Here type of amalgamation will not applicable. First point you need to understand is AS 14 is not applicable. AS 14 is not applicable to transferor company. AS 14 exclusively framed for accounting of amalgamation in the books of transferee. Therefore, in the books of transferor, AS 14 is not applicable. Now, then what is the accounting treatment in the books of transferor? We need to close the books of accounts of transferor company. So we need to close the books of accounts of transferor company as it is liquidated, and no more in existence. No more in existence. Sir, generally when any business is liquidated, closed, obviously we need to close the books of accounts. That is what we do here. So we need to close the books of accounts. So this is the important thing. Close the books of accounts of transferor company. And this standard AS 14 is not applicable for them. That means general accounting treatment. Now, but here one important point you need to understand. Whenever we are closing the books of accounts, we will take the help of one account called realization account. If you observe in dissolution of partnership also, we have opened an account called realization account. Since we are closing the books of a transfer or company, for the purpose of closing the books of accounts, we will open an account called realization account. So with the help of realization account, books of accounts will be closed. What is the purpose of realization account? The purpose of realization account is ultimately through this transfer, through this acquisition and through this amalgamation, whether we are on the profit side or loss side, and ultimately those profits and losses must also belongs to our shareholders. That's why this realization account we will open. Of course I am going to explain it so elaborately. So first need to understand, we are doing accounting in the books of transfer or company. AS 14 is not applicable for them, and we need to close the books of accounts of transfer or company because they are no more in existence, and with the help of realization account, books of accounts will be closed. Now the question is, sir, how to close the books of accounts? See, I am going to tell you the systematic procedure. You keep this in mind so that you are never going to be failed. So whenever you are closing the books of accounts, you should remember this order what I am teaching. First of all, suppose there is a company A Limited. Now this company A Limited is taken by B Limited. That means this is transfer or company. Now tell me, in a company generally what items will be in existence? Assets, liabilities, share capital, reserves and surplus. Correct? So that means closing books of accounts means what? Closing books of accounts means we need to close assets, we need to close liabilities, we need to close shareholders, share capital, we need to close reserves and surplus. Everything must be removed from the books. That is called closing books of accounts. So being a transferor company, I am transferring my business. Therefore I am in no more existence. Therefore in my books, whatever assets are there, whatever the liabilities are there, whatever the reserves are there, whatever the share capital is there, everything will be closed. Then only it is called closing of books of accounts. So my agenda is, now I need to close everything in the transferor books. Sir, how I am going to close it? First, listen to me the procedure. First, assets. Out of these assets, some of the assets will be taken by transferee company. Some of the assets may not be taken by transferee company. Those assets will be sold, so that all assets will be closed. The assets which is taken by transferee company, transfer them to realization account. The assets which are not taken by transferee company, sell them, so that their accounts will be closed. So entire assets will be closed. Come to liabilities. Some of the liabilities will be taken by transferee company. The liabilities which are not taken over, settle them, so that entire liabilities will be done. The transferor company liabilities, some of the liabilities may be taken by transferee. If all taken, no problem. Everything will be closed by transferring to realization account. And those liabilities which have not taken over, settle them, so that liabilities will be closed. Next, reserves and surplus. You know, reserves and surplus always belongs to equity shareholders. Transfer to them. And then share capital. When it comes to share capital, if it is preference share capital, transfer to preference shareholders. If it is equity share capital, transfer to equity shareholders. That's it, closed now everything. But one more thing is left out. What is that? In this entire episode, either we may end up with profit or loss. That profit or loss is also adjusted to equity shareholders. So therefore this is the main idea. So we are closing the books of transferor. In transferor, generally what items will be there? Balance sheet, imagine. Balance sheet items. Assets will be there. How assets will be closed? Some of the assets may be taken by transferee. Transfer them to realization account. Close them. Those assets which are not taken over, sell it. Come to liabilities. Some of the liabilities may be taken by transferee. Transfer them to realization. Those not taken will be settled. Reserves and surplus will belong to equity shareholders. And share capital. If it is preference share capital, transfer to preference shareholders. If it is equity share capital, transfer to equity shareholders. Now, whatever the purchase consideration received from transferee company, that purchase consideration, give it to equity shareholders, preference shareholders, so that their accounts will be closed. PC you are going to receive now, because you are acquired by transferee. So transferee company is going to pay some purchase consideration to your shareholders. Receive that PC, give it to the shareholders. The PC which belongs to equity shareholders, give it to them. The PC which belongs to preference shareholders, give it to them, so that their accounts will be closed. So this is the basic idea. But see, the order of remembering things is like this. First, listen, everybody. First, for transfer of assets taken by transferee company, realization account debtor to assets. For transfer of liabilities taken by transferee company, liabilities to realization. Third, purchase consideration due. Whatever the purchase consideration due from transferee company account debtor to realization. Fourth, receive purchase consideration. Purchase consideration can be in any form: cash account debit, equity shares in transferee company account debit, preference shares in transferee company account debit, debentures in transferee company account debit, or any other securities in transferee company account debit to transferee company account. Fifth, assets which are not taken will be sold. Cash or bank account debtor to assets. Any difference will be transferred to realization account. Sixth, settlement of liabilities which are not taken over. Liabilities to cash or bank. Any difference will transfer to realization account. Seventh, liquidation expenses. As a transferor company, I am liquidating, right? So certain expenses I need to incur. So for liquidation expenses, I need to incur some expenses. If I incur any expenses, realization account debtor to cash or bank. Generally, I will write. And then settle preference shareholders by transferring preference share capital. Preference share capital account debtor to preference shareholders account. Next, ninth entry, settle the preference shareholders, so that their account will be closed. Now come to equity shareholders. Equity share capital, reserves and surplus transferred to equity shareholders. Close the realization account, the profit or loss transferred to equity shareholders. Whatever the PC we received in entry number 4, that is given to equity shareholders, so that their account will be closed. So it will take some time, but if you follow this order, there is no chance that you are going to do a mistake. So this is the basic idea. Now what we will do is, I will write one by one entry. So you along with me, please write, so that it will be a practice. So accounting entries. Accounting entries. First entry nana, for transferring assets taken over by transferee company. Whatever the assets of transferor company, in that assets, any assets taken over by transferee company, first we need to close them. So for this, the entry is, tell me how assets will be closed. When you are closing the assets, they will be credited. Realization account will be debited. So realization account debit to various assets. Whatever be the assets, so in transferor company, whatever be the assets are there, so out of those assets which are taken over by transferee company, first we need to close. The entry is realization account debtor to various assets. Now tell me, at what value you will close these assets? Book value or agreed value? For example, CCC. For example, transferor books, plant and machinery value 10 lakhs, sir. Book value this is. This is taken by transferee company at 12 lakhs. So we will write 10 lakhs, 12 lakhs. What value you will write? 12 or 10? What value? 10 or 12? Sir, you are closing the books of which company? Transferor. In transferor books, what is the book value? 10 lakhs. So you need to close at 10 lakhs only. That is book value. Always remember, book value we need to take. Book value we need to take. Book value we need to take to close the assets which is taken by transferee company. So here we are closing only assets which are taken by transferee. Assets which are not taken over will be sold. That entry we will write separately. This is only for transferring assets taken over. Important. Taken over by transferee company. Now, here one important point. In respect of any asset, if there is a provision, what we do? We need to close the asset at its gross value. Provision will be closed along with liabilities. For example, debtors. Against debtors, there is a provision for doubtful debts. Suppose, for example, debtors 10 lakhs. Provision for doubtful debts 2 lakhs. So 8 lakhs is the value, net value, right? So realization account debtor to debtors. Suppose debtors taken by transferee company, right? We need to close it. At what value you will close? So 10 lakhs, 8 lakhs, 10 lakhs gross value. 2 lakhs you need to close along with the liabilities. Along with the liabilities. So what is the first entry? In whose books we are writing the entries? Transferor. Correct? First entry. For transferring assets taken over by transferee. What are the assets which is taken by transferee company? What entry you will write? Tell me. Realization to assets. At what value? Book value. In respect of any asset, if there is a provision, transfer must be done at a gross value. Provision will be transferred along with the liabilities. Hello. In respect of any asset, if there is a provision, transfer will be done. The asset will be closed at its gross value. Provision we will close along with the liabilities. So that point also please remember, one of the important points here. That's it. So for transferring assets taken over by transferee company. Second, for transferring liabilities taken over by transferee company. Sir, similar to assets, liabilities of transferor company taken by transferee company. So what are all the liabilities taken over? Close them in your books. Because see, they are your liabilities, your assets, but taken by transferee. Once they have taken over from your books, you need to close na. That is what we are doing. So tell me, when you close a liability, you will debit na? You will debit liabilities, correct? So therefore liability, various liabilities account debit. Various liabilities account debit to realization account. Okay. At what value? Book value. So please don't consider agreed value in transferor books. Always remember, you are closing the books of transferor company. How you are going to close? What is the book value? That value you will close here. So irrespective of the value at which these assets and liabilities taken, you need to close the assets and liabilities taken by transferee company. As a transferor in my books, I need to close them at their book value. Next, here the point is, I told you, in respect of any asset, if there is a provision, that provision along with liabilities we need to close. Like for example here, provision for doubtful debts account debtor to realization, like that. Next, third entry. Third entry is for PC due, purchase consideration due, PC due, PC due. Sir, I am transferor company, sir. PC is due from which company? Transferee. So tell me, when amount is due from somebody, what is the entry you will write? Their account will be debited. This is due entry, not receipt entry. So therefore, we will debit what? Transferee company account will be debited. So transferee company account debit to realization account. Entire purchase consideration will be credited to realization account. So at what value? PC. PC. We calculate PC na? Yesterday we learned to calculate PC. So net assets method, so net payments method, like that. So whatever the PC we arrived, that we will write. So PC due. So the entry is transferee company account debtor to realization account. Next, for receipt of PC. Sir, we receive PC from transferee company. As a transferor company, we receive PC. So what we can receive? We can receive in any form. PC can be in any form. Suppose we receive cash. So when we receive a cash, what is the entry? Cash or bank account debit. We may receive equity shares. Equity shares in transferee company account debit. Or we may receive preference shares in transferee company as a PC. Preference shares in transferee company account debit. Or we may receive debentures. Debentures in transferee company account debit. Sir, whatever. Yesterday I told you. It is, form is not the matter. Who is the recipient? If the recipient is shareholder, we will consider it as a part of PC. So purchase consideration can be in any form. Be it in cash, be it in equity shares, be it in preference shares, be it in debentures, be it in any other securities. Whatever you receive, you just debit it in your books. Later on, this purchase consideration is given to our shareholders so that their accounts will be closed. So receipt of PC, cash or bank account debit, equity shares in transferee company account debit, preference shares in transferee company account debit, debentures in transferee company account debit, any other asset account debit, whatever you receive, you debit. 2. When we receive PC, obviously transferee company account will be closed. So in entry number 3, we have opened transferee company na. Now that account you need to close. Receipt of PC. So we received PC. PC due entry, third entry. Next we received the PC. Now, fifth entry. Now, once these 4 entries are passed, sir, fifth entry is assets which are not taken over by transferee. We need to sell them. So for sale of assets not taken over by transferee company. Sir, the assets of transferor, some of them might not be taken by transferee company. In that situation, we need to sell our own assets because we are liquidating na. Generally our assets will be sold. So when we sell our assets, what is the entry? Cash or bank account debit to asset, correct? Cash or bank account debit to asset account will be credit. Cash or bank account debtor to asset account. And we might end up in what? Profit or loss. That profit or loss we will transfer it to realization account. Hello? For example, cash or bank, sale value. We will receive sale value. Asset is at book value. So the difference is profit or loss. For example, 100 rupees is asset value. We sold at 110. So cash or bank account debit 110 to asset 100. What is the difference? 10. That 10 will go to realization account. Generally, we will credit to P&L. But in this case, company is liquidating. Therefore, we need to transfer it to realization account. So therefore, to realization. When realization account will be created? Profit on sale, if there is a profit. Okay, if there is a loss, debit realization account. Because sir, the main purpose of realization account is this. At the time of liquidation, whatever is happening, because of those activities, whether we end up in gains or losses. So that profits or losses finally will be given to our shareholders only. That's why we are preparing this realization account. So therefore, assets which are not taken over by transferee company. Now, whenever you write entry number 5, all assets are closed. Tell me, relating to assets, we have passed 2 entries. First entry, fifth entry. What is the first entry? Assets taken by transferee company. What is the entry? Realization to assets. At what value? Book value. Fifth entry? Assets not taken over. Assets not taken over by transferee company. The assets which are not taken over, what you have done? Sold. Whenever there is a sale, what is the entry? Cash or bank account data to assets. The difference will be transferred to realization. So all assets are closed. Everybody. Now come to entry number 6. Liabilities. For settlement of liabilities not taken over by transferee company. Similar to assets, sir, some of the liabilities of transferor company may not be taken by transferee company. Those liabilities you need to settle. So tell me, when you settle a liability, what is the entry we will write? Liabilities account debit to cash or bank. Liabilities will be debited. So liabilities account debit to cash or bank. And when you are settling a liability, either you may end up in gain or loss. For example, liability is 100, sir. You may pay 90 rupees because creditors has given a discount. In that case, you credit balance to realization account. Realization account. What is this? This is profit on payment. Profit on payment. Sometimes you may end up in loss also at the time of settlement of liabilities. If at all, if there is a loss on payment, that means if you are making excess payment, for example, liability is 100, you are paying 110, maybe because of penalty, interest and all, 100 rupees, 10 rupees extra, that will be debited to realization account. That is nothing but loss on payment. So when you sell the assets, sir, we may have profit or loss. Similarly, when you are settling the liability, we may have profit on payment or loss on payment. So the liabilities which are not taken over by transferee company, we will settle on your own, and any difference between the book value, see, this is the sale value, right? This is the not sale value, this is book value of the liabilities, book value. We settled it. So this is settlement amount, actual amount paid, right? This is amount paid. Suppose our liability is 100, sir. We paid 110, sir. So what is the loss, sir? 10. That will be debited to realization account, like that. So you write 6th entry, all liabilities will be closed. So by the time you are passing 6 entries, all assets and liabilities are closed. So tell me, relating to liabilities, which entries will come? 2nd entry, 6th entry. What is 2nd entry? Liabilities taken by transferee. What is the entry there? Liabilities to realization. At what value? Book value. Liabilities which are not taken over, you settle on your own. Entry number 6. What is the entry? Liabilities to cash or bank. Now 7th entry done. Now as a transferor, the next entry I am going to pass is liquidation expenses. Important, everybody please focus. For liquidation expenses. Liquidation expenses. Sir, at the time of amalgamation, sir, generally we are going to incur some expenses. Those are called liquidation expenses, or maybe for selling of assets, settling of liabilities, we may incur some expenses called realization expenses. Whatever be the expenses, those expenses actually borne by, incurred by transferor company. So what is the entry we will write? Here there are 3 possibilities. 3 cases may come. One is liquidation expenses incurred by transferor company. Second, liquidation expenses incurred by transferee company. Third, liquidation expenses incurred by transferor reimbursed by transferee company. Important, listen to me. Sir, between the agreement between the transferor and transferee, actually which company is liquidating? Transferor. So actually the expenses belongs to whom? Transferor. But sometimes what happens is, transferee company may came and say, see, you incur, we are going to reimburse. Or directly we will incur, we will pay. No, you need not worry. So depending upon the agreement between the parties, the entries will come here. So here the first case is liquidation expenses incurred by transferor company itself. We are writing entry in the books of transferor. Suppose liquidation expenses incurred by transferor company itself. So here generally when we incur expenses, what entry we will write? Expenses to cash or bank. Here and later expenses will be transferred to realization account, right? Sorry, P&L account. But here these liquidation expenses directly will be debited to realization account. So realization account debit to cash or bank account. Realization account debit to cash or bank account. This is when liquidation expenses are incurred by transferor. Second case, sir, liquidation expenses incurred by transferee company. Sir, as per the agreement between the parties, transferee company may say to the transferor company, we will incur your expenses. You need not worry, we will pay. Then in such a situation, in the books of transferor, no entry. No need to pass any entry, because they are incurring expenses. So in my books, no entry. And third situation, liquidation expenses paid by transferor and later on reimbursed by transferee company. Sir, liquidation expenses actually paid by transferor, later on reimbursed by transferee company. This is also possible, sir. Actually, who incurs? Transferor. But who actually pay? Transferee. That means it is like first you incur, we will pay. Like see, whenever we are doing articles, CA articles. So we went to the client place. What we do is, so we will first incur our expenses from our pocket. Later on we can put the bills and we can claim the amount. Similarly here, as per the agreement between transferor and transferee, so actually liquidation expenses incurred by transferor, but transferee company says we will pay the amount to you. So it is also possible. So if this is the case, two things. First, when expenses actually paid by transferor company, so they know that these are going to be reimbursed by transferee. So transferee company account debit to cash or bank, they will write. This is when paid, when they paid the expenses. Later on, when we receive the amount, cash or bank account debit to transferee. Transferee company account on reimbursement. Partly we will write per part of the amount. Remaining realization to cash or bank. Okay? First one. What happened to first one? Third. Yes. Transferee. No, you have not understood properly. Here the point is, there is a transferor, there is a transferee. In whose books you are writing? Transferor. Liquidation expenses actually belongs to whom? Transferor. But there is an agreement between you and me, transferor and transferee, that transferee company said you incur. we will later on pay to you. That means from my pocket cash is going now. So cash or bank credit. Whenever cash is go from your organization, cash or bank account will be credited. And you know this amount is going to be reimbursed by whom? Therefore transfer account is debited. And later on when they actually paid, reverse the entry. That means in effect no entry has been passed. So therefore what is the difference between case B and C? No difference, both are same only ultimately. But see, please here, please involve and understand the things, very easy. In first of all, always don't deviate from the subject. Whose books we are writing? Transferor. Now we are discussing about liquidation expenses. First understand what is liquidation expenses. Generally at the time when the company is liquidating, they are going to pay legal fees, surveyor fees, whenever they are selling the assets, some auction expenses, notice expenses, all these things will be incurred. They are collectively called as liquidation expenses. Now actually these expenses, if borne by transferor, realization to cash or bank, that is the first case. Sometimes in the agreement itself, these expenses, transferee company says, we will pay, you need not worry, we will pay directly. Then in my books, no entry. Third case is there. In that case, they say to transferor, first you pay, later we will give it back. So when you first pay, you know that this amount is going to be reimbursed by transferee. Therefore, transferee to cash or bank, and when actually you receive the payment, cash or bank to transferee, that means in effect no entry passed. But the difference between B and C is, in B, transferee company said directly we will incur. In C they said indirectly. First you incur, later on we will pay. Hello? So tell me, liquidation expenses, how many cases? First case. Liquidation expenses incurred by whom? What is the entry? Realization to cash or bank. Second, liquidation expenses incurred by? What is the entry? No entry. Next, third case. Liquidation expenses paid by whom? Reimbursed by? In that situation, first when they actually paid, what entry they will write? Transferee to cash or bank. When actually they received the amount? How many of you understood? Raise your hand. Any doubts? No, that's it. So from now onwards you should not get any confusion regarding liquidation expenses. Now assets over, liabilities over, PC received, liquidation expenses over. Now settlement of shareholders. Because we are writing in the books of transfer, we need to close all the assets, liabilities, share capital, reserves and surplus. Settle the shareholders account. Generally when there is a dissolution of partnership, that is what happening now. We need to settle the partners account. Similarly, we need to settle here which accounts? Shareholders account. When it comes to shareholders, there are two parties. One is preference, another one is equity. So first we will settle the preference shareholders. Okay, entry number 8. Tell me, in the transferor company, what items are belongs to preference shareholders? Preference share capital. Preference share capital is the only item. Reserves and surplus? Equity. Don't give it to preference shareholders. That means to preference shareholders, they belong only one thing. What is that? Preference share capital. So therefore, for transferring preference share capital to preference shareholders account. Okay. For transferring preference share capital to preference shareholders account. So when you transfer preference share capital to preference shareholders account, preference share capital account will be debited because that account we need to close. So preference share capital account debit to preference shareholders account credit. Preference share capital account debit to preference shareholders account. Now here one important point, sir. Sir, preference share capital you will debit at what value? Face value. Capital will have a face value. But sometimes you may pay preference shareholders at premium. That means the amount due to them may be more than the face value or less than the face value. Sometimes you will, pay the preference shareholders at premium, sometimes at discount. Please understand, this is important concept. We are discussing preference shareholders of transfer or company. First, preference share capital will be transferred to preference shareholders. Preference share capital you will close at face value, but amount due to preference shareholders can be at more than face value. Suppose when you are redeeming preference shareholders at a premium of 10%. Suppose for example preference share capital 10 lakhs. So 10% premium, that means you need to pay 11 lakhs. Then what about the difference 1 lakh? That will be transferred to realization account. Whatever the profit or loss we get at the time of settlement of preference shareholders on liquidation, that will be transferred to realization account. Important. Sir, simple principle, sir. At the time of liquidation, whatever profit or gain comes, don't transfer it to P&L. Transfer directly to realization account. Now here, so many students are not understanding the concept properly. That's why I'm saying, here you need to understand, on one hand we have preference share capital, on the other hand the amount due to preference shareholders. Generally, whatever the capital brought by preference shareholders, that is the amount we need to pay. But sometimes in the question they say, preference shareholders will be paid at a premium, preference shareholders will be paid at a discount. Therefore, the difference may arise between the preference share capital and amount due to preference shareholders. That difference we will transfer to realization account. So therefore, realization account may be debited or realization account may be credited. When we, debit realization account, sir, loss, when there is a loss, that means excess paid. Excess paid. Whenever we are paying excess amount, premium, to the preference shareholders, whatever the capital they brought and what is the amount we are paying. If the amount paid is more than the capital they brought, that is loss, na? That loss will be debited to realization account. Important, 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 important. Definitely it will be there in the question. Next, when we credit realization account, when there is a profit on payment or discount portion. When we settle at discount, that means suppose face value 10 lakhs, amount due 9 lakhs. So 1 lakh is what discount on payment to preference shareholders, that will be transferred to realization account. So therefore, now we have cancelled preference shareholders, preference share capital is cancelled. So tell me, what is the entry you will write when you transfer the preference share capital to preference shareholders? Preference share capital account debtor to preference shareholders account. Preference share capital will be debited at face value. Preference shareholders account will be credited at amount due. This amount due face value difference may be transferred to realization account. Hello. Next. Now, next make the payment to preference shareholders so that their account will be closed. For payment to preference shareholders. Sir, tell me how you are going to make the payment to preference shareholders. In entry number 4, you received PC, na sir? That PC belongs to preference shareholders, give it to them. Their account will be closed. I want every one of you to see entry number 4. What is the entry number 4 we have written? PC received. Right? What is the entry? Cash or bank account debit, equity shares in transferee company account debit, preference shares in transferee company, whatever we received, na? In that, how much belongs to preference shareholders? Give it to them. Therefore, the entry is, when you make the payment, preference shareholders account debit to cash or bank to whatever preference shares in transferee company account, whatever we received and belongs to preference shareholders, give it to them. In entry number 4, you received PC, na? In any form, it can be in cash, it can be in equity shares, it can be in preference shares, it can be in debentures, it can be in anything. But how much belongs to preference shareholders? Give it to them. Generally in the questions to preference shareholders, either cash will be paid or transferee company preference shares will be given. That's why I have written only 2. Suppose if the preference shareholders are given equity shares, then you have to write 2 equity shares in transferee company. Debentures, 2 debentures in transferee company. To any other asset, 2 any other asset in transferee company. So this is the entry. So with this we completed what? preference shareholders account is settled. So by this time, by the time you are writing entry number 9, what are all the items closed in transfer or company? Tell me. Assets, liabilities, preference share capital. 3 items closed. Now the thing remaining is only equity share capital, reserves and surplus. Imagine the balance sheet of transferor. Assets, liabilities, share capital. In share capital, equity, preference, reserves and surplus. So assets closed by entry number 1, entry number 5. Liabilities closed, entry number 2, entry number 6. Then preference share capital is closed by entry number 8. Next, we are remained with equity share capital and reserves and surplus. Now we need to settle which accounts? Equity shareholders account. So relating to preference shareholders, there are 2 entries will come. Can you tell me what is the first entry? Due entry, transferring preference share capital. What is the entry? Preference share capital account debtor to preference shareholders. Difference will be transferred to realization. Then pay the amount to preference shareholders. What is the entry? Preference shareholders account debtor to whatever PC they received. In entry number 4, we received PC na. In that PC, whatever the amount belongs to preference shareholders, give it to them, so that their account will be closed. Have you all understanding? Systematically we are doing. Next, entry number 10. Now onwards, equity shareholders, sir. But entry number 10, what we do is, at this point of time, we need to close the realization account. For closing realization account. Close the realization account. When you close the realization account, you may got either profit or loss. So there are 2 possibilities here. On closing realization account, suppose if there is a profit on realization account, profit, that profit will be credited to equity shareholders. So therefore, what is the entry? Realization account debit to equity shareholders. Equity shareholders account will be credited. Profit na, it will be given to equity shareholders. So credit to equity shareholders. Suppose there may be a loss. When you close the realization account, you may end up in loss. When there is a loss, it will be equity shareholders account will be debited to realization account. So the main purpose of realization account is ultimately to ascertain the profit or loss of amalgamation. This profit or loss will be transferred to equity shareholders. If it is a profit, it is credited to equity shareholders. If it is a loss, it will be debited to equity shareholders, so that realization account will be closed. Now, can you tell me what items will come in realization account till now? 10 entries we passed na. Out of these 10 entries, which entry involved realization account? First entry, transferring assets, transfer of liabilities. Next, PC due. Third entry. Next, assets sold, profit or loss. Liability settled, profit or loss. Next, liquidation expenses. Next, preference shareholders settlement difference, profit or loss. That's it. So these items will come, and then you close the realization account. Whatever the profit or loss came, that will belongs to equity shareholders. That means indirectly what we want to say is, at the time of amalgamation, being a transferor company, I am closing my books. In this process, ultimately, what is my gain or loss? What is my profit or loss? That profit or loss must belongs to real owners of the company. Who are the real owners? Equity shareholders. Therefore, we have transferred it to equity shareholders. So when there is a profit, realization to equity shareholders. When there is a loss, realization, equity shareholders to realization. Next, entry number 11. For transferring equity share capital, reserves and surplus to equity shareholders. Now before settling equity shareholders account, first to transfer what belongs to equity shareholders. So in transferor company, what items are belongs to equity shareholders? Equity share capital and reserves and surplus. So transfer these 2 things. Equity share capital account debit, reserves and surplus account debit to equity shareholders account. Yes, equity share capital account debit, reserves and surplus account debit to equity share capital account. Sorry, equity shareholders. Equity shareholders account will be created. So we have transferred. Now one more important adjustment, Nana. In the transfer book, suppose if there is any fictitious assets, those fictitious assets will also be adjusted to equity shareholders only. Don't transfer to transferee company. For example, in the balance sheet of transferor company, we have preliminary expenses not written off, or share issue expenses not written off, or any discount on issue of shares. These are all what? Fictitious assets. If any fictitious assets is there, they actually will be written off, and they will be written off to equity shareholders only, because ultimately they need to bear the loss. So therefore, if any fictitious assets are there, those fictitious assets also we need to transfer to equity shareholders. So important. So first, equity shareholders ke realization profit or loss will be transferred. Later on, equity share capital, reserves and surplus will be credited to them. Next, for transfer of fictitious assets of transferor company. Sir, in transferor company, whatever be the fictitious assets are there, those fictitious assets will also be adjusted to equity shareholders. So what are the fictitious assets? Fictitious assets may be in the form of preliminary expenses. Fictitious assets may be in the form of preliminary expenses not written off, discount on issue of shares, yes, discount on issue of debentures or shares, whatever, because issuing of shares at discount is prohibited. But if at all they are given in the question, we have to adjust. That's what. So these fictitious assets, if I adjust to equity shareholders, what is the entry? Equity shareholders account will be debited. These assets will be credited. Fictitious assets these are. So to fictitious assets. Whatever be the fictitious assets, one by one you have to write, sir. Like preliminary expenses, discount on issue of shares, debentures, like that. And sometimes, sir, we may have P&L account debit balance in transferor company. Debit balance in P&L account indicates loss. That loss also be adjusted to equity shareholders only. Reserves and surplus may be positive or negative. Reserves and surplus may be positive or negative. If it is a positive, it will be credited. If it is a negative, it will be debited. Hello? Sir, please understand, sir. This concept of fictitious assets is not there as per the schedule 3. But sometimes in the questions they may give according to the old schedule 6. Actually, the practice of writing preliminary expenses, putting the preliminary expenses not written off, discount on issue of shares, debentures in the balance sheet is prohibited as per schedule 3. But if at all they are there in the transferor company balance sheet, what will you do? How will you going to adjust those assets and liability as assets, fictitious assets, by transferring to equity shareholders? So therefore, equity shareholders account debit to fictitious assets. Any fictitious assets in transferor company, please adjust it to equity shareholders. Now finally, close the equity shareholders account. 13th entry for closing equity shareholders account. How you are going to close? Whatever the PC received in entry number 4 belongs to equity shareholders, give it to them so that their account will be closed. So when you close, what is the entry? Equity shareholders account debit to cash or bank, whatever we received belongs to equity shareholders, to equity shares in transferee company account, to preference shares in transferee company, whatever they received, just simply credit debentures in transferee company account so that their account will be closed automatically. So with this we have completed transferor company books. transfer or company books we have closed. So total 13 entries came. Now the thing is that every one of you must tell 13 entries, and every one of you must remember the order. Okay, that will be the agenda, and with the logics, everything we discussed. So once again, close your books and just listen to me. Order I am going to tell. This order, it should fit into your mind. Order of closing. First, transferring assets to realization, which is taken by transferee company. Second, liabilities taken by transferee company. Close it by transferring to realization account. Next, PC due, PC received. Next, assets not taken over, sold. Sixth, liabilities not taken over will be settled. Seventh, liquidation expenses. Eighth, amount due to preference shareholders. Ninth, amount paid to preference shareholders. 10th, close the realization account. Transfer the profit or loss to equity shareholders. 11th, amount of equity share capital, preference share capital transfer to equity shareholders. 12th, fictitious assets, if any, they are adjusted to equity shareholders. 13th, close the equity shareholders account. Tell me the order. First, transfer of assets taken by transferee company. Second, transfer of liabilities taken by transferee. Third, PC due. Fourth, PC received. Fifth, sale of assets not taken over. Sixth, settlement of liabilities not taken over. Seventh, liquidation expenses. Eighth, preference shareholders due entry. Ninth, payment to preference shareholders. 10th, close the realization account. Transfer profit or loss to equity shareholders. 11th, transfer equity share capital and reserves and surplus to equity shareholders. 12th, fictitious assets, if any, there will be adjusted to equity shareholders. Last entry. Tell me, for transferring assets taken by transferee company, what is the entry? Realization to assets at what value? Book value. Second, for transferring liabilities taken by transferee company, what is the entry? Liabilities to realization at what value? Book value. What is entry number 3? PC due. What is the entry for PC due? Transferee account debit to realization account. Entry number 4, when you receive PC, anything, cash or bank account debit, equity shares in transferee company account debit, preference shares in transferee company account debit, debentures in transferee company account debit to transferee. Entry number 5, sale of assets not taken over. What is the entry? Cash or bank account data to asset. Any profit or loss will be transferred to? Next, 6th, liabilities not taken over will be settled. What is the entry? Liabilities to cash or bank. Any profit or loss will be transferred to? Liquidation expenses, how many cases? First case, liquidation expenses incurred by transfer. Realization to cash or bank. Incurred by transferee, no entry. Incurred by paid by transfer, later reimbursed by transferee. When we actually paid, what is the entry? Transferee account debit to cash or bank. When we receive the reimbursement, cash or bank to. Next, for transferring preference share capital to preference shareholders. Preference share capital to preference shareholders. Any difference between the preference share capital face value and amount due will be transferred to realization account. Then settle the preference shareholders. What is the entry? Preference shareholders account debit to whatever PC received in entry number 4 belongs to preference shareholders. Be it cash, be it preference shares, be it equity shares, be it debentures, be it any other asset. Just credit. So in entry number 4, whatever the PC we received, we debit now. And at the time of settlement, we credit. So that their accounts will be closed. Next, close the realization account. What is the entry? If it is a profit, realization to shareholders, equity shareholders. If there is a loss. Next, for transferring equity share capital and reserves and surplus to equity shareholders. Equity shareholders account debit to equity share capital account debit, reserves and surplus account debit to equity shareholders. Any fictitious assets? Adjust to equity shareholders. Equity shareholders to fictitious assets. And finally close the equity shareholders account. How? Equity shareholders account debit to whatever the PC received in entry number 4. belongs to equity shareholders, give it to them so that their account will be closed. Everybody, now see, after passing these 13 entries, what are the ledger accounts we are going to prepare? Realization account, definitely we need to prepare. So in the books of transferor, generally we need to prepare realization account, transferee account, depending upon the ledgers they have asked. But generally realization account, transferee company account, we will prepare. If required, cash or bank account also prepared. Okay, so this is the accounting in the books of transferor. So what we are going to do is, we are going to solve some questions relating to this so that you will understand to what extent we are able to apply this. So